Hello everybody, my name is Mark. Welcome to another one of my videos, profitable investor videos on investing. This video is about investing in stock options and how to qualify for and invest in level 2 option trading. If you will remember, you cannot just buy and sell stock options with a broker. You have to get approved for it. And the way you do that, and this is TD Ameritrade, is you go to Client Services, go under My Profile, and click on General, like that. And then you look for the option trading, which is right here, and you click on Apply for Upgrade. And you can see that there are 4 levels. This one is the first one. Oops, sorry about that. And this one is the second one. This one is the third one, and this one is the fourth one. So I did a video on the first level, which is writing covered calls and writing cash secure puts, where you are the option seller and you are selling call options and put options to the open market, and you are being compensated for that. So this video we are going to go into level 2. Now level 2 also has writing covered calls and cash secure puts, just like level 1 has writing covered calls and cash secure puts. But with level 2, you have the extra of you now can purchase options, which means now you can be the option buyer, and that's really where the fun begins. That's really what options are designed for, in my opinion. Covered calls and cash secure puts, those are for the very conservative investor that's really not looking to take a big amount of risk or make a lot of money. But purchasing options, becoming the option buyer, to me, that's what options are for. And so we will go over that right now in this video. So let's say that there is a stock out there that you like, and let's pick Tesla stock, the electric car company. So let's pull them up. And you can see that they are trading at $295.93. So if you wanted to buy 100 shares of Tesla, you would need $29,593. Okay. So instead of doing that, what you could do is get the level 2 option trading and become the option buyer and buy a call option. And here is a list of the call options. You can see you can get options that expires in a day. That would be tomorrow. Today is Thursday, the 4th of May 2017. Or you could get a long-term option which expires 624 days from now, almost 2 years from now. Or you could get a medium one. You could get one that expires in a couple weeks or in a couple months. So let's look at the options a couple weeks from now. So you like Tesla and you think, actually let's do 43 days. Let's say you think in the next 43 days Tesla stock's going to go up. So let's see what they have to offer. So you see that the Tesla is trading at $295.46. So if you wanted to buy 100 shares of Tesla, you would need $29,546. And that could be a lot of money for some people. So what you might do instead is buy a call option, and this call option gives you the right to buy 100 shares of Tesla in the next 43 days. It's a call option is a contract to buy 100 shares per contract of whatever stock it's for. And you can see there are different prices that you can buy it at. You could buy this call option here. There we go. And that call option is for $295 a share, and that's the premium. That's how much you spend for the contract, somewhere in between $12.90 and $13.40. Or you can do a lower option and do $290, and it's a little bit more money. And options go up and down in value depending upon what price you can buy the stock for in the contract, and also how long it's good for. For example, if you go really far out, you can see it gets more expensive. The $290 call is $58, and all contracts are multiplied by 100, so it would cost you $5,800 to buy a call option that lets you buy 100 shares of Tesla for $290 a share. And for the next 624 days, if you wanted to, you could spend $5,800, which is still a heck of a lot less money than spending $29,546. Okay, so that's what options are for. That's what they're built for. They give you leverage to be able to invest in stock that you don't have the money. If you don't have $29,500, you're out of luck. But luckily, we have stock options and call options that let you buy these contracts. It's kind of like buying a mortgage on a house. You may not have $200,000 or $300,000, but you might have $10,000 for a down payment, and that's what call option contracts do. And that's what you do when you get the level 2 trading ability. So again, I'm going to go back to that. So you go to Client Services, click on General, click on Apply for Upgrade, and then you would apply for level 2. Now level 1, you want to get level 1 approval and maybe write some cover calls, write some cash secured puts for a few months, and then when you get experience, then it'll get easier to get approved for level 2. So once you get level 2, now you're ready to be the option buyer. So let's go back to Tesla, and you can purchase options, you can buy calls and puts. We'll go back to Tesla, and we'll go back to our 43 days expiration. So let's say in the next 43 days you think Tesla stock's going to go up. Tesla stock trading at $295.46. So you decide to buy one call option that gives you the right for the next 43 days to buy 100 shares of Tesla stock at $295, okay? And you see the bid is $12.90. The ask is $13.40, so let's just say $13. Now the first point here is that when you buy options, all contracts are multiplied by 100. So you take this price, and we said it's going to be $13 multiplied by 100. It's going to cost you $1,300 to buy this one call option contract, and that call option gives you the right in the next 43 days at any time you can buy 100 shares of Tesla stock at $295 a share. So $1,300 is still a lot less money than $29,546. Okay, now let's look at the chart and you'll see just how good of a thing that is. Okay. Now, here's Tesla stock in the last year. It's been doing very well. You can see back in December it was at about the 175 level, and up here it went up to 275. That's $100 a share. Okay, and then it had a little drop back here, and then it went up again from about the 250 level to the 325 level. That's $75 a share. So let's be conservative and look at this. Okay, this is from January to March. Look at all of that increase. So let's clear this out and restart it here. Okay, so you can see from January to, let's go in the middle there. That looks like about 43 days. January to the middle of February would be about 43 days. So that looks like almost a $50 increase, right? Now, this would be best case scenario if you bought Tesla at the perfect time and it just went up and away. Okay, let's look at how much money you would make if you bought that call option and then Tesla stock went up $50 a share. So first of all, Tesla stock, $295 a share, 46 cents, goes up $50. Now we're looking at Tesla stock up to $345 a share, right? Now, you spent $1,300 for that one call option, and so in order to make money, the price of Tesla would have, or the value of your call option would have to go up more than the money that you spent. Okay, now the value of a call option is calculated by what the price of the stock is compared to the price that you can buy or sell the stock at in the call option contract. So in this case, it's $295. Okay, so if that Tesla stock went up to $345, 345 minus $295 is 50. Okay, so that means this call option right here, the bid and the ask, would be around $50. Okay, 50 times 100 is $5,000. Okay, so you spent $1,300 to buy that call option, and now your $1,300 call option is worth $5,000. So $5,000 minus $1,300 would be $3,700. So you would have made $3,700 in 43 days if Tesla stock goes up $50. If it has that best case scenario run and it just goes up like gangbusters, like this, right? So you could make a heck of a lot of money. If you made $3,700 on a 1,300 investment, that is almost a 300% gain. 1,300 times 300 would be 3,900, and you would have made 3,700 profit. So that gives you a little taste of an idea of the wonders of leverage. Okay, leverage is the reason why the rich get richer. Leverage is exactly what you're doing when you're buying options. The definition of leverage is not margin. You're not borrowing money when you use leverage necessarily. All the word leverage means is that the value of your investment is greater than the capital you are using to invest with, and that is definitely the case with these call options and these put options. Okay. You spend $1,300, you buy that call option contract, and you don't have to borrow money. If you have $1,300 in your bank account, you can put that into your Ameritrade or your margin account, whatever, your broker, and you can spend that $1,300 by a call, and there's no margin, there's no borrowing money. That's just you using leverage. It's the same reason why people get rich buying and selling houses. You know, people buy and sell houses, they pay low down payment, they try to flip that house or whatever they do to make profit, and then they make money. Same thing with call options, same thing with put options. Now, put options, you would buy a put options if you thought Tesla was going to go down, if you thought the bottom was going to fall out, and then you would make money if the Tesla stock went down. So if you wanted to buy a put option, if you thought Tesla was going to go down, you might get this one, this $300 share price of put option. This put option right here, 43 days, right there, 43 days. For the next 43 days, you buy a put option, and for the next 43 days, you have the right to exercise your option to sell 300 shares of Tesla. And it looks like that the bid is $1,545 times 100, so about $1,550, let's say. And then again, if the price of Tesla dropped, you know, $40 or $50, you would make a lot of money. So level 2. This is all level 2 option trading. I'm going to go back to the level 2 form. Okay, so you apply for the upgrade, and you've done level 1. You've written some covered calls. You've written some cash secure puts. Now you want to get the level 2. Level 2 has the same thing as level 1, but now you can be the option buyer. Okay, and real quickly, going back to Tesla stock, going back to the option chain, when you want to buy a call option, you would click on the call option like that, and then click the buy button, or you could click the price, and then this comes up. Okay, and you see you have 4 choices here. You got buy to open, buy to close, sell to open, sell to close. So in order to a simple way to learn what those different transactions mean. Number 1, are you the option buyer or are you the option seller? When you were selling covered calls or cash secure puts, you were the option seller. So you would have clicked sell to open, right? You're opening a new contract, but in this case, you're the option buyer. So you click buy to open. You click your one contract, and then you click right here. You put in your price right there, and we said $1,300. It would be $13 times 100. You can see that you would be spending $1,300 for that call option, that $295 call option, which expires June 16th, 2017, 43 days from now. And so for the next 43 days, you own a contract to buy 100 shares of Tesla stock at $295 a share, and then you just sit tight for the next 43 days, and as soon as Tesla starts going up, you can decide when you want to sell your option back to the open market and make your profits. So that's how it's done, ladies and gentlemen. Again, going back to the upgrade form, you go on to client services, go to general, and then click on your option trading right here, apply for upgrade. And if you had the first level, if you had this level for a while, level 1, then you're ready to get level 2, and you can now become the option buyer. So that's it for this video, ladies and gentlemen. Thank you for watching, and I will see you in the next video when we go over the next level. It will be this level right here, the 3rd level.